They owe the money. They collect the taxes. They print the currency. So here's the uncomfortable question. Why don't governments just pay off their debt? Because the moment they try, the system starts to break. This matters right now because global government debt is bigger than at any point in history. Not just in poor countries, in rich ones, in powerful ones, and none of them are rushing to pay it down. That's not an accident. It's design. Here's how it actually works. When a government borrows, it doesn't borrow once. It borrows continuously. Old debt matures. New debt replaces it. Think of it less like a credit card and more like a conveyor belt. Money comes in. Money goes out. The belt keeps moving. Now imagine a government says, "We are paying it all off." To do that, it needs massive cash. That cash only comes from two places: higher taxes or deep spending cuts. Either way, the economy slows. Less spending means less growth. Less growth means lower tax revenue. So the very act of paying off debt shrinks the income needed to do it. That's the first trap. The second trap is quieter. Government debt isn't just a liability. It's an asset. Pension funds hold it. Banks rely on it. Insurance companies are built on it. That debt is treated as safe. Remove it too fast, and suddenly the financial system has nothing stable to sit on. Liquidity dries up. Markets freeze. Risk spreads. Paying off debt sounds responsible. In practice, it pulls a key support beam out of the room. Then there's inflation. Governments can reduce debt in real terms by letting prices rise. Not dramatically, just enough. Wages lag. Debt stays fixed. Over time, the burden shrinks. It's subtle, politically survivable. Paying debt outright is loud, painful, and immediately unpopular. There's also the issue no one likes to say out loud. Debt is control. When a government issues bonds, it creates a relationship with banks, with investors, with institutions that want stability. That pressure disciplines policy. A government with no debt is freer, but also harder to anchor. Markets don't always like freedom. So instead, governments roll debt forward. They manage it. They never finish it. The public story is responsibility and prudence. The private reality is balance. Too much debt causes panic. Too little breaks the plumbing. So governments don't aim for zero. They aim for manageable. Which leads to the real question. If debt is never meant to be paid off, only sustained, is government debt a problem to solve or a permanent feature of how power works?